economy has faced several global headwinds. It's managed to stay steady. It's been a busy last few months. What were your priorities as you were drafting, putting this budget together? What were the three key things that you wanted to
I think the
ensure?
government's three key, since you're asking for the three key priorities, there were three. One, to act as a driver of growth at a time when global growth is slowing down, but when India is poised to recover its growth rate to its potential normal. And so that was one of the objectives, and that you see reflected in our big increase in capital investment and in several other parts of the budget, which are essentially to propel growth. The second major concern was that in doing that, we wanted to be sure that we were fiscally prudent. In our neighborhood, very close to our country, there are countries which have ended up with very serious problems because they have not been prudent in terms of their macroeconomic management. So prudent macroeconomic management was the second concern. And there is a little bit of a tension between the first that I mentioned and the second. Spending more is good for growth, but could be bad for macroeconomic stability. So this balance we had to strike delicately. And the third priority was that the kinds of people whom the market economy, even if it were growing, would not take care of, we wanted to put a special emphasis on leaving no one behind. So that was the third set of priorities, and you see that reflected in several announcements in the budgets, including the one for particularly vulnerable tribal groups, the one for prisoners who are languishing because they can't afford bail. There are a number of these interventions which are for those who would not be taken care of automatically by a thriving market economy.
Okay, so those are all very, very dynamic and very tough challenges to balance and to manage. In terms of shock absorbers, what has the budget done to build those shock absorbers in the economy so that we're able to withstand the year that we are facing?
See, there are limits to what you can do domestically in terms of shocks that emanate from abroad. So if the shocks are minor, I think we are quite capable of absorbing them. But the other thing that I would say is last year we had some major exogenous shocks coming from outside the country because of the Ukraine war and its effect on petroleum prices, gas prices, fertilizer prices, food prices, and on terms of trade. So it was a major disruption. The fact that we were able to withstand that and actually end the year with a fiscal deficit that remains within the targeted percentage indicates that I think we have matured as an economy, and our macroeconomic management institutions have also matured, whether it's the Reserve Bank and the other institutions, including the government. That gives me some confidence that we have the necessary policy instruments and flexibility to be able to respond to the coming year. In terms of shock absorbers, no explicit shock absorbers that we have built. Our numbers are slightly conservative, which is true. So we've not overestimated potential revenue, and we have sort of kept our estimates reasonable. So I think that is the best thing that we could do in terms of being conservative rather than too optimistic.
So conservative rather than being too optimistic, which is a dose of realism. Is our growing trade current account deficit a matter of concern for India? And how much does it bother you that India's trade with China, now the deficit has ballooned to $100 billion?
So the current account deficit is of course a matter that is important in macroeconomic management, and it is high. It's not at the level that we would like it to be, no doubt about that. But India is a country which is dependent on imports for several key unavoidable commodities: oil and gas, certain kinds of fertilizers. Now, the share of oil and gas in our imports shot up last year because of what happened in Ukraine. So a part of the current account deficit is, if you like, something that has resulted from a global change in terms of trade, particularly on energy and commodities. But I think that is reversing. That will probably be better next year. So I think the current account next year is likely to see some improvement from this year, merely because oil prices are not going to be as high as they were. Now, that's an assumption. If
Sure.
there is something else that happens and pushes them back up, then we will be back to where we were this year. But I think there is a good prospect of its improving. In terms of imports from China, I think I wouldn't like to focus specifically on imports from any particular country. I think what we need to do is build domestic strength in manufacturing, but do so in a competitive way where our products are competitive and can compete with anyone. And that's
Sure.
where the programs like the production linked incentive program are meant to create the domestic environment for manufacturing which is cost effective. And that's why the PLI is needed, because
Fair enough.
you need to create, for many of these modern industries, you can't set up one factory in isolation. You need the component suppliers to be present near you. You need a whole ecosystem to be built. And that is where a modicum of government support in the early years till scale is built
Right.
becomes important. And so
I
those
want-
measures are being
I
taken.
want to understand from you, we've seen import tariffs being raised in the past. We've seen that happen this time as well. So there are two theories to this. That either you're protecting your industry from a deluge of imports, but you're also hurting the industry that is very dependent on these imports to manufacture cost competitive products. So what line or what
So I
what
think there
direction
is
are
a
we going
little
in?
bit of truth in both. But I think on the second one, there is a mitigating factor that we do have arrangements whereby exporters can get relief on these import duties and not necessarily pay them. So the argument that every increase in import duty will increase export costs is not necessarily valid, because there are drawback schemes, there are impressed schemes where if you're buying for export, you're buying a component which goes into something that is exported, you don't necessarily have to pay the import duty. So it doesn't necessarily fall on exporters. Sometimes it does, especially if it's embedded in something that is 2 steps removed and so on. And secondly, there are some compliance costs to these schemes. So that is a cost on the exporter. So there is some truth in both of your arguments. But I think a certain level of protection is required in some of our industries in the genuine sense of an infant industry. I am aware that sometimes infants don't grow up and therefore they need to be weaned away from the bottle quickly. That
Right.
part is well taken.
Right.
But the infant does need some nutrition in the beginning.
So considering we're seeing, a tension with China on our borders as well, so would that translate into some kind of economic backlash going forward?
Backlash by whom?
Economic, well, I wouldn't, okay, maybe backlash is too strong a term, but economically, are we going to see a pushback against China?
You will note, I mean, I don't want to comment on a particular country because I am an officer of the government and these are sensitive. I'm not in the Ministry of External Affairs and I don't want to complicate their job by anything that I say. So I'll be a little taciturn in what I might say. But I will say this, that in many of our choices, we are very conscious of the strategic aspects and we have made changes to public procurement policy, which affect procurement from countries with whom we share a land border. We've made changes in our FDI policy. Some of the trade arrangements that people think we could have got into but did not get into. All of these decisions are influenced by strategic considerations. And we will seek to improve our exports. We will seek to grow as an economy. But definitely we will not do anything that compromises on security, even if it means some economic cost is involved.
Okay. All right. I want to move on now to the fiscal deficit.
Yeah.
The budget has been hailed as a very fiscally prudent one. All the economists love the budget. They're saying there's so much transparency in the numbers. And the fact that we decided to follow a path of being fiscally very conservative. But in terms of your targets, 4.5% by 25-26, that's a very aggressive target. How are you planning to accomplish it?
Well, I think you are now taking me to beyond this year's budget. The first task is to accomplish this year's reduction of 0.5%.
Let's, yeah, sure.
So you're like asking a 8th standard student what I'll do for my 10th standard marks. But it's going to be, it is a challenging number, the reduction to 4.5, but it is feasible. It's difficult, but feasible.
Fair enough. So how, any plan?
I wouldn't want to comment on specifics for a variety of reasons, but it'll be a combination of revenue buoyancy, tight control on revenue expenditure, especially non-priority and non-scheme expenditure, and good growth in the GDP. These three things will, and so that's why, and they're all interlinked. So we have, we have improved the composition of our public expenditure so that the denominator expands faster.
Right, right.
And we'll exercise tight control on revenue expenditure.
So I remember our last conversation when you shared with me details about how expenditure was cut across different ministries, which was considered not productively being plowed back into the economy. So is there a plan like that?
That's an ongoing effort.
Sure.
That continues. We are pretty tight in terms of managing anything that is not schematic or not development related. And also within the schemes, we are also ensuring that there's no parking of funds idly anywhere, because that's how we reduce our interest costs. We don't want to borrow and then park the money somewhere when it's not ready to be spent. So we are moving quite decisively towards just-in-time release. And this means that this has helped us in terms of minimizing borrowing.
That's very, very interesting. Any specific schemes that...
Not schemes. Actually, across the board, we have a new system called the SNA system, which is a single nodal account system for all centrally sponsored schemes which go through state governments. Every scheme has a single nodal account in each state. So let's take a particular scheme. Let's call it the PM Awas Yojana. So if there is a PM Awas Yojana, there is one account in each state government which is for this scheme. We release money electronically to that account.
Okay.
The state's counterpart share is also released electronically to the same account within a certain period of time. No money can be released from that account except for that scheme. So it cannot be used to pay some other cost of anyone else.
Okay.
And we have complete visibility electronically on a dashboard of how much money is sitting in each of these schemes in each of the states.
Okay.
And I have a daily, I
when
don't look at it every day, but
when was
it's been implemented. It started about a year and a half ago and is almost completely implemented this financial year.
Fascinating.
So the money that sits in that account is visible to us and we don't make the next release until it is substantially used. Not 100%, but we expect a 75% utilization before the next installment is received. And the interest on that account is shared between center and states. What this does is the money can't be held invisibly for some unknown purpose or can't be diverted from the scheme for which it was released to something else. So this is a major tightening that we have done and this helps us with our borrowing costs.
Any savings that you've...
I don't want to share an estimate.
Okay, fair enough. All right.
I can say it is substantial.
Substantial, but you won't share a number with me. No. Okay. In terms of your non-tax revenues, they're budgeted to rise to 3.2 lakh crore next fiscal from a 2.62 lakh crore this fiscal. What are the assumptions that you're working with here?
Higher dividends mainly.
Okay.
A lot of our PSUs are doing better and we are expecting better dividends next year. Mainly it's that.
Okay. And on the revenue expenditure front, there are some who say that the target that you've set might be on the conservative side and you could overshoot that, considering this is also going to be an election year, we are facing global headwinds. So have you factored that in?
I have not factored anything that is not announced or known. And so I'm not aware of any such things. So, I mean, whatever is known is factored.
Okay.
So whatever is not known obviously can't be factored. But there's nothing that I know of which is not factored.
Okay.
So I don't necessarily share this thing that many more things are going to come. Perhaps not. I mean, I doubt it. If it comes, I think we do have a little bit of room to accommodate small changes. And in terms of the revenue expenditure being projected, well, I would say this, that our fertilizer subsidy estimates, I think, are pretty realistic. They're 20% lower than this year. But that's already reflected in global fertilizer and gas prices. So, in fact, the reduction is more than 20%. What you see today is more than 20% below the average for the last year. We've only projected a 20% cut. Food subsidy cut, I think, is very realistic given the present policy. Most of the subsidies, I think, are reasonably
How about
projected.
the pension bill?
Pension bill, we've taken the hit this year on the OROP, which was a 30,000 crore hit. That's been built into this year's revised estimate. So the pension bill is rising. It is rising next year. We've accounted for that. That will happen. And those are inevitable costs.
So I wanted to get your thoughts on the fact that a lot of states are now going back to the old pension scheme. From a fiscal point of view, how worrying is it?
The decision is a policy decision of the state government that I don't wish to comment on. Each state is, entitled to take these decisions, but it has definitely got adverse consequences in the long run, and they're not merely adverse, they are substantially adverse, in the sense that the burden of these, basically the move is from a funded defined contribution system to an unfunded defined benefit system. And I would add, not even a defined benefit system, an unfunded, undefined increasing benefit system. Because the old pension scheme of the government of India is far more generous than any similar pension scheme of a defined benefit variety in any other government or public sector undertaking globally.
Right.
Globally, there are such schemes where the pension is defined on the basis of closing salary. But it is actuarially either unknown or extremely, at least I am not aware of practical examples where a person's pension increases not merely for inflation, but for what his successor generation of officers gets as a salary. So you will get somebody whose pension would be 300% of their last salary. That is a feature of the Indian old pension system, which accrued through judicial pronouncements, administrative orders after the 1980s. And that has made it an extremely expensive system. And that is a system to which returning has very serious fiscal costs. So I admit that there may be some concerns with staff about the new pension scheme, but the solution to them I do not believe is fiscally sustainable if the solution is a return to the old pension scheme.
Okay, well, I hope the states are listening, because it's of course a huge disservice to our future generations who are going to inherit this bill.
It will also mean a transfer from the general public to the government servants in terms of whatever budget is available. It's either it will mean a tax increase or it will mean a shifting of resource allocations towards salaries and away from other expenditure.
Education and health. Okay. Okay, this year, internal and extra budgetary resources also make a comeback.
No.
Off-budget borrowings?
No. Zero.
But
internal is different. Those are the borrowings of PSUs for their own expansion. They are not government.
But FCI, Food Corporation of India, 50,000 crore is what we had last year in terms of budgeted. This year, you have 1.5 lakh crore.
That is not borrowing. That's our budget contribution.
Okay, so
they are not borrowing. They are not borrowing at all.
Okay, so they are not borrowing. This is your budget contribution.
Yes. There is, I repeat on record, there is no off-budget borrowing this year which will be serviced by the government of India. Not at all.
Okay.
It's not there.
Okay, all right.
What you see as IEBR is, let's say ONGC borrows from markets to spend on capital. We reflect that in our books as part of public capital expenditure for information purposes. But it's repayable by ONGC, not by the government. We have no off-budget borrowings this year.
Okay.
Definitely not.
All right. Okay, that's heartening to hear. Okay, moving on, you've also assumed a 10% growth in your import duty collections. But the rates haven't changed much. So what's driving this assumption?
Nominal growth.
Okay. So
inflation.
So you're banking on...
It happens. I mean, if the economy grows at 6% and inflation at 4%, customs duty will typically increase by 10%.
Okay. All right. Okay. Also, the budget estimate for the current fiscal for your windfall tax collection was 90,000 crore, which was revised to 150,000 crore, which was a revised estimate. And now for the next fiscal, you've budgeted 180,000 crore. What's behind this assumption?
I don't think that is just the windfall tax. I'm not sure which, I'm sorry, but I don't have my books with me, and I don't think that is the figure of the windfall tax. I think that includes excise duties.
Okay, so can you just explain this entire jump, like 180,000 crore? What are the components that
the excise duty would be constant because it's a specific duty. The windfall tax assumptions are based on petroleum prices. So at certain prices, we collect certain amounts. So making an assumption of where it will be, the customs department and the excise department has projected that. So I think that's quite realistic. But that's not a great source of additional revenue, because some of that revenue would have come to us anyway as profit share if it wasn't an excise duty.
Okay.
So we have a profit sharing arrangement in many of the petroleum contracts.
Okay.
If they make profits, they share a percentage with the government. If it's an excise duty, we collect 100% of it. If it was a profit share, we might have collected 50% of it.
Okay.
So a part of that 180 would have come anyway.
Okay.
As profit share.
Okay.
It would have been less. The profit share would have been less than that.
Sure.
And a part of the 180 is not windfall. It's actually the normal excise. This is
Okay.
my impression, but I'm afraid I haven't checked this,
Okay.
and I will
Sure.
not swear to these figures. Yeah.
Sure,
Okay.
sure. All right. Also, in terms of your non-tax collections,
Yes.
what are you banking on? Is there a spectrum auction that you're looking at?
The non-tax revenues, the increase is primarily on account of dividends. The rest are fairly steady. There are license fees and there are a number of other revenues. They are not-
Dividends.
yeah.
Okay. All right. Okay. In terms of, I'll move on now from the economy. I want to talk about a big story that's happening in corporate India. What's happening with the Adani group? Does it worry you that this might dent India's impression, on the world stage? It might raise questions on governance.
I don't think so. I think individual companies running into market disturbances is a common occurrence across markets. There was this wonderful company called FTX which collapsed recently in the United States. It had marquee investors of very high pedigree. The company is bust, and I think there was somebody who was very famous with 3 initials, and usually it is Tamil Nadu where you know people by their initials, but there was somebody, some SB something. So there are these marquee investors who had invested in FTX, and it collapsed. So
Sure.
this, I'm not making the comparison here because that was a sort of crypto bubble. We are dealing with a different situation here. What I'm trying to say is market situations happen globally. So to say
Right.
that this is an India situation is something that I find a bit odd.
Okay.
I mean, I've heard of this kind of thing happen repeatedly across markets where some company faces problems in the marketplace. So I will not comment on the specifics of this particular case. It's a private sector company. It's that company and its investors and the regulators will deal with whatever issues are there. That's not something of relevance to the government. The only reason I brought up the FTX issue is because you said, does this affect India as a destination?
Sure.
Well, if it affects India as a destination, then I'm afraid the United States is a very tarnished destination as of today because similar events happen. And so I don't think this has anything to do with India as an investment destination. Point number 1. Point number 2, I don't want to comment on the fortunes of any individual company. So I really have nothing much to say on that. But it doesn't affect India as a destination.
Okay,
Definitely not.
But in terms of our Indian financial institutions' exposure to the Adani group, has that...
That's a fair question, but I would say that the information I have not studied it in any great close detail, but is that the exposures are very small in terms of the aggregate percentages of the holdings of our public financial institutions. So I'm categorical that there is no adverse impact on depositors or policy holders. Absolutely not. I think the holdings in any one entity are very small relative to the overall size of the portfolios of these institutions.
Okay. Okay, my last question is on disinvestment and asset monetization. There's a lot of talk about why it was not featured as prominently in the budget speech. And there's a sense that maybe the government might be slowing down on their divestment agenda. I wanted your comment on that.
I don't think there is any perceptible slowdown. The companies that have already been slated for disinvestment, the process is continuing. No new cases involving legislation have come up.
Okay.
So the ones that are in process are in process. They're going. IDBI has recently received good expressions of interest, so they'll go forward.
Right. And in terms of privatization of banks, that was announced.
That requires legislation.
So
it's not part of the legislation program as far as I know.
Okay, for this year. Okay. All right. Thank you very much, Mr. Somnathan, for your time. Pleasure speaking with you as always.
Thank you.
Thank you.